Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Monday, August 4th. In today's episode, we'll recap earnings from Apple and Amazon. Low-key, I'm getting tired of all these earnings reports. Every episode has been very stock market centric last week. After that, I'm going to tell you about a new deal update between the ESPN and the NFL. Stocks continued to slide at market close on Friday, and the S&P dropped for the third day in a row, closing down 0.4%. Also, on Friday, the tariff deadline has expired, and the new tariff rates will be in effect next week, with the exception of China, since they decided to extend for another 90 days. But for the other 80 countries, the rates range from 15% to 40%, and the countries not named in that executive order will pay a 10% baseline tariff. Also on Friday, we got hit with the July jobs report, and it wasn't so hot. According to the reports, only 73,000 jobs were added to the US economy in July, which was less than the 100,000 jobs that was expected. We got hit with the double whammy where inflation is showing signs of heating up and the job market is showing signs of slowing down. So it'll be interesting to see how the markets react to that, and the markets might be in for a bumpy ride in August. Let's run through some headlines, starting with Apple's earnings. Apple delivered a surprisingly strong quarter, with revenues jumping nearly 10% to $94 billion in Q2. That's the fastest revenue growth that Apple has seen in 3 years. And also, Apple made more than $23 billion in profit. Now, the two key drivers of growth for Apple last quarter were iPhones and China. iPhone revenues were up 13% in the quarter, and a reason for that might be because of tariffs. People were rushing to buy iPhones because of concerns that tariffs could potentially drive up prices. Now, Apple hasn't raised prices on their products yet because of tariffs, but tariffs did cost the company $800 million in Q2, and Apple is expected to pay around $1.1 billion in tariffs in the current quarter. Their services business continues to put up solid growth as well, with revenues up 13% to $27 billion. This is all the money that Apple makes from the App Store and iCloud storage fees. Overall, pretty solid quarter for Apple, and Apple stock rose nearly 2%. Let's also talk about the Amazon earnings real quick. Honestly, this is my biggest position, but I hate covering Amazon. It's just too boring for me. Amazon beat Wall Street expectations for both revenue and profits in Q2. Sales were up 13% to over $167 billion, and this is all solid stuff. But the markets did not care about that. The stock is actually down nearly 7% because the company gave a weaker than expected profit forecast for Q3 because of concerns around slowdown in AWS. Outside of cloud, Amazon's e-commerce and advertising business are still strong, retail sales in Prime Day were solid, and ad revenue is still growing nicely. But none of that was really enough to offset the concerns around AWS and the profits moving forward. Let's switch gears and talk about ESPN. After months of speculation, ESPN, who's owned by Disney, just announced a historic multi-billion-dollar deal agreement with the NFL. For the first time, ESPN will take a minority equity stake in both the NFL Network and the NFL Red Zone channel. ESPN will start carrying NFL Network and Red Zone on its platforms. In return, the league will receive as much as 10% equity in ESPN, and that's potentially worth billions of dollars. When I heard of this deal, I immediately went to Twitter and I had to look up what Scott Hansen had to say, and he tweeted one word: onward. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Reddit shares are ripping after the company crushed earnings estimates for the quarter. Revenue grew by 78% in Q2, and daily active Reddit users jumped by 21% to over 10 million. Now, the growth story for Reddit has definitely been AI. Reddit has been licensing its data to companies like OpenAI and Google to train their AI models, and now they're also going direct to consumer with their own AI tool called Reddit Answers. Reddit's AI Answers tool now over has 6 million weekly users, which is up from the 1 million last quarter, so they saw a 6x growth over the last few months. Yeah, investors were loving this, and shares of Reddit are up more than 14%. On the flip side, shares of Moderna are slipping after the company cut its full-year revenue, and they blame that on a delayed shipment of its COVID booster vaccines to the UK. Instead of being shipped by the end of 2025, these boosters will now arrive in Q1 of 2026. And the timing of all this isn't great. Moderna just announced a 10% staff cut earlier this week, and the company is still losing money. They beat earnings estimates for Q2, but that wasn't enough to calm the investors, and now shares are down more than 4%. That's all for today's show. Keep navigating those waters, and see you tomorrow.